affordable real estate investments.com, a property investment guide to creating real estate income for properties priced under $30,000.
Hello, this is Lisa Phillips, and welcome to AffordableRealEstateInvestments.com. It's where I give you an honest and practical guide to real estate investing at a price you can afford. Today, I have a guest on the show. His name is Kwesi Jenkins, and he is a loan processor, and he has a unique take on things as he works closely with the mortgage officer as well as the underwriter. He's that person in between that gets to see exactly what is going on the front end and back end on getting your uh, mortgage services, which is a very important question to a lot of new and experienced investors. So today, Kwesi is going to give his thoughts on the different aspects of the current trends, especially before the financial crisis and after, and things that you should expect to know as a first-time real estate investor or someone who's going for a mortgage, as well as other things that might help you quick start or get the ball moving pretty quickly on getting your mortgage serviced. So thank you very much for coming, Kwesi.
Thank you. Thank
All
you
right.
for having me.
Well, I appreciate the fact that you have knowledge that my audience has been emailing me about that you can give them in a very on-the-ground, real way that
Right.
they might inspect. So
Right. Hopefully I can help.
thank you, thank you. Do you want to talk about your experience as an underwriter, or sorry, loan processor, or whatever the...
Right. Loan process. Well, I've been basically in financial services for 2005 to now 8 years. The first, I want to say, 5 years, I was an actual mortgage loan officer, basically the one taking the application. And for the
Mm-hmm.
past year and a half, going on 2 years in June, I've actually been a processor. So I've
Okay.
seen both sides, the person that most people talk to, who takes your application, asks questions, and then the process who actually processes the loan. The person most people don't know about.
You are an amazing person for a real estate investor to talk to. I got to be honest, because getting that mortgage is a big part of our business. And you're like the person who's getting it through.
Right. And funny that you say talking to, because a lot of people don't want to talk to the processor. And I'll address that a little bit later, but it's important that you do talk to your processor, and that will
Okay.
smooth a lot of things over. So
All right. So yeah, can you give your thoughts on where we're going? I like doing before 2008 financial crisis and after. I see the trend
right.
going more so like um, higher down payments, tighter loaning standards, shorter amortizations. I'm hearing, maybe 30 years not going to be
Hmm.
the norm in 5 years. Maybe it's only going to be, 10, 15-year arms, especially with Freddie and Fannie. It sounds like they're
Hmm.
getting out of the
Hmm.
picture. So can you go over what it was before and how that is changing as you see it on the ground as well as what you hear?
Okay. Well, basically, before '08, how I saw it out on the ground, it
Hmm.
was if you if you had a pulse, you can get a mortgage for basically anything.
That's true.
Um, you
That
get a
is
mortgage for
true.
anything. I mean, whether it be a HELOC or a
Right.
second mortgage or a purchase, whatever you wanted, as
Everybody.
long as you can breathe, you didn't even have to prove income, you had to prove assets. Even with appraisals, you could have your own appraisal for the property. You didn't have to go with the bank or the lender to do an appraisal.
Right.
Switched after '08, it's really changing. Right now, what I see is basically that things are transitioning back to where they used to be in the late '70s, early '80s.
Mhm.
Interest rates higher. We're not there yet. Interest rates are still historically low. I
Mhm.
mean, we're talking. I just checked the rates at 3%. The highest I've seen is 5.1%.
Right.
So that's really low compared to what our parents went through.
My parents, I
So.
think I grew up in a house with it was $30,000, and I think they had like 18% or
Hmm.
something.
Right, right. So we're way. I'm gonna say way, but we're not even near that yet. You
No,
know,
nowhere near.
when rates start creeping up above 6 and 7,
Things get
yeah. But
crazy.
right, but now no, it's still. I think if you can do it, it's a good time. But The difference between after '08, standards have tightened, down payments have increased. Now you have to qualify for the loan. You have to qualify. You have to prove everything: your assets, your income, appraisals. The bank does its own appraisals now. You can't take an appraisal that you got maybe a year ago or whatever and say, hey, this is no. The bank's going to do their own appraisals. And then with Dodd Frank, everything is changing. So right now we're in the period process of I call it the eye of the storm. All
Okay.
these things are changing. It seems calm right now, but things are just really, really changing. And I don't think that those changes really haven't really hit yet. And I think that's where a lot of, borrowers, investors are right now. They're just calling the no man's land. I like to call it.
So is the difference going to be solely that higher interest rates? Is the borrower going to have to do anything special or that they haven't had to do in the past? You think like
Yes,
how we're going to have to
yes.
change our game to
Well,
accommodate
you
this?
you have to be more educated on your personal situation.
Okay.
Um, you have to know how to um, get information to the processor because our job is not to educate you. We're not your financial advisor. If
Okay.
we ask for something, you're going to have to know how to get it. You're going to have to um,
Okay.
engage the services of a lawyer now for certain things, a real estate attorney, if you can have access to that. You're going to have to know what your title looks like. You're going to have to know, you know, be able to get access to your bank statements. Now letters of explanation, you have to provide that. So you have to be more educated about your personal situation and be able to get the information that the underwriter or excuse me, the process needs in a certain amount of time because now there's what is called rate locks.
Okay.
When you do an application, you have a certain period of time where we have to get the application in, get it, get it, get it applied, get it approved up front, get the appraisal and get the numbers, and just keep the file moving forward. There's a time hack, and now it's because everyone's so competitive. It used to be 90 days, now 60 days.
Oh,
It looks like
wow.
the industry is trying to get it down to 30 days.
Wow, that's really
But
quickly. That
yeah,
means,
but to do that,
right.
yeah, and so but to do that, it's going to be more the onus on the borrower itself. And you have to have your ducks in the order, because if you
So,
don't, and something's missing, and the time expires, the loan's going to be deactivated.
so what can someone do to manage that? It's a bit of a disconnect now, right? Like they don't know sometimes what you need.
Right.
What are some of the things that the borrower can do to close that gap and that disconnect?
Well, I think the first thing you
There,
should do is you have to know what type of loan are you looking for.
okay,
You have to know, okay, what am I doing? Is this an investment? Is
right,
this a refi? Is this a purchase? Okay, how
okay,
long was the term? You basically have to know what program are you looking for. There's many programs out there now.
yeah,
There's still ARMs. You have the MHA program or the HARP program, and so there's
okay,
this different MHA HARP. They're the same thing. You have conventional, you have conforming, non-conforming. You have FHA, you have VA, VA EARLs. There's so many different programs, and you basically have to know, okay, what program am I going for, and what do
make
I
things
want to
go
accomplish?
faster,
Right, right. Because let's say you're doing an investment property,
right,
but then you're talking to a mortgage loan officer that just does um, a conventional purchase.
right,
It's not going to fit. It doesn't fit.
right. You
It,
need to talk to the right person.
exactly, exactly.
Are there any websites you suggest off the top of your head? I know it's off the top of your head, where we can find out the different types that you go to as a resource by chance?
Uh, let's see. You can always go. Well, if you're doing a veteran loan, you can always go to I think VA.gov. I think. Um, Anytime you want information about a certain loan program, just type in the name in the Google search. I don't know specific websites,
Right.
unfortunately,
But we can
but
all go to that. If we're going to a
yeah,
certain bank or credit union, they'll have a
right,
list of the different products,
right,
right?
exactly,
So it's up
exactly.
to
Yeah, they'll
us to
have a
go
list.
and look at that list of what they're like
Hmm.
HELOCs, refi, this and that. But usually a website has that
Right,
information of what they
right,
offer.
exactly, exactly.
Okay.
Hmm.
All right. So any other things that they can do other than like so first you're saying know the loan you want to get. So go do some
Exactly.
research, go to that bank, give them a call if you need to
Hmm.
ask them this is what I'm trying to do. What do you think works best in this situation?
Yes and no. You really have to know upfront what you want because if
Oh,
you ask a salesperson, what do you think? They're going to push you into a
oh,
certain product that they think that you need. You have to know specifically what you're looking for, what
okay.
you
All
want.
right. So a little
because
bit more aggressive research.
exactly, it's like you don't go to a grocery store without knowing specifically what type of meat you want. So you have to look at it like that. Okay, I'm looking for turkey. I'm not looking for pork. So you go to the place section that has turkey. You don't go to the pork and say, okay, I'm just gonna guess and just grab something. No, you
Yeah.
need to know
The
specifically what you
problem
want.
the problem nowadays though is that we sort of know what we want, but it's really hard to get like a definitive
Right. The answer.
list.
Yeah.
This
Huh.
a definitive list of what the options are. You know what
Right.
I mean? So
Right.
that's like something that might help real estate investors to know.
Right.
Um,
A
but
list. So you're asking me what there's a certain list that they should.
yeah, or just like how do you find? I mean, there's so much out there. Like, how do you even? I mean, you only know conforming and not. I mean, I don't even know what conforming or non-conforming is. Like
Right.
like how do you find that out without talking to the mortgage office? Like how do you even know what the possibilities are, you know?
Well, one thing and this is where it goes to like the old days and now.
Okay.
Honestly, you're gonna have to go do research. What I do is,
Mhm.
when I see things, I'm like, okay, what's this program? I'm just gonna do a search on the internet about it and just get into it. Or there's a lot of times there's an 800 number you can call. You're gonna have to do a lot of legwork, unfortunately, because
Mhm.
a lot of this information wasn't needed before '08. You just went in and
Mhm.
got what you needed, whatever. And you're gonna have to unfortunately do the legwork. Like you say on your site,
You
you got
know
to
what?
put in the time.
Here's
You got
what
to
we'll
put in
have
the
to
time.
do. This is what we'll do. So for now, we'll talk about the trends, but I'm gonna have you on again, and we're gonna list and talk about all the different loan products. How about that? Would
Right.
you be able to
Okay.
do
Yeah.
it?
Yeah. Yes, I will be able to do
Because
that.
you know
Yeah.
that list off the top of your head, conforming, non-conforming, V8, this and that. And we can just do one episode where we give it and we list them all
Mm-hmm.
out. And
Right.
then so they can visit that at a later time and know what the different options are. And we can do
Right.
that. How about
Mm-hmm.
that?
Right.
Good, good,
That's
good.
perfect. That's perfect.
All right. So let's go on a little bit.
Okay.
Um, so we sort of know where we're headed, and it's going to be the onus on us to know exactly what we want, and that'll make things a lot smoother.
Right.
Um, What else can you say for first-time real estate investors? What should they know as far as what to expect that
Okay.
might ease their way?
The first thing you need to expect is that, well, number one, your processor is in your corner. They want to help you close your loan because, they have their quota too.
Okay.
They want to close your loan. They want to close as fast as they can. And they want to provide great customer service. You know, um, they're in your corner. Number one.
Before we get that far, I
Okay.
want to keep that thought because we're going to revisit that. But can you
Okay.
say a little bit more about obtaining the mortgage on the front end, about
Okay. Oh yeah.
maybe the idea of pre-approval, what you think about that? Is it necessary? And if yes, is there anything so that I want to get started in real estate investing, I don't know where to start. Can you sort of
Okay.
help with
Okay.
that?
Yeah. Sure. One thing, pre-approval does help because the mortgage loan officer will be more open to you if they know that you are already approved for financing.
Mm-hmm.
It's like, knowing that if you could pull the trigger, you can pull the trigger. They don't want
Mm-hmm.
to waste your time with someone that can't take an app. It's about taking, for being a mortgage loan officer, it's about taking apps. The more
Okay.
apps you take, the more likely you're going to close, and the
Right.
more commission you make. So to get to that point, you have to, number one, you got to get access to your credit report.
Mm-hmm.
You have to get access to your report. And something that I've done is you have to get access to a credit coach. You have to know where your credit score stands. You have to know your credit history. You have to clean
Okay.
that up. You got to clean it up. Number
Right.
one.
So it's
So
worth I use like Experian and I'm going to use like I go to Experian.com. You can use their credit services to see the report. I use that, and now that like my score is raising there, I'm gonna go to Equifax, which is my lowest, and start looking at that. But they do give you indicators on
I have something better.
what's that?
I have something better. I've, and this is another topic this is another show we could do, but I use a company called Just Credit Solutions,
Mhm.
and they're basically a credit restoration company. I know the owner, the founder of the company personally. She's been working with me since '09, um, and there's a variety of reasons why, but basically, my credit score was 539. Now it's 670,
Right.
and January is going to be in the mid 700s. going up. And I know that I could not do that by myself, or because she basically works with a lot of the credit companies for me. And the process has been streamlined because during the time that I started working with her, I was out of work. I was unemployed. It was a bad time.
Hmm.
But working with her, everything's been so streamlined and easier for me. And there's companies out there like that, but again, you have to know which ones to talk to.
Well,
But
right. There's a lot of people who take your money and they don't do
right,
anything. So I'm a
she,
little, so I don't, if I
right,
don't have personal experience, I'd never
right,
recommend it to my audience,
right,
not unless
right,
I've been through the process.
right.
So that's why I was saying I use Experian, which that helps because that tells you exactly those are worth it to me. So you have your Just Credit Solutions working with a trusted credit counselor that you know. I like the online ones. Experience been
Right,
working for me just on their
right,
website when you apply for
right,
their credit report and pull
right.
because it
Mm-hmm.
tells you you have 3 or more installment loans. You have you have this maxed out or none of your average credit is not above $5,000. You know, like it goes very
Right.
specifically. So if anyone, credit counseling is almost out there. I don't have any experience with it, but yeah, I personally use, and I'll tell my audience,
Mm-hmm.
go to the Experian.com website.
Right. Yeah,
When you
I
do
would tell
that
them
back
that.
end stuff, they give you the exact what you need to do. Like I learned something like if I have an installment loan, you want to get it 20% below that high limit. That's something that
Right.
they put on that back end. I wouldn't know that off the top of my
Right.
head, but they're like, that'll make your credit rise. And so since it's worked for Experian with them giving me that information, I'm now going to go to
The
TransUnion.
union.
You know
Mm-hmm.
what I mean? Because that's my,
Same
I
thing.
mean, sorry, Equifax, that's my lowest,
Yeah.
not
Yeah.
TransUnion. And I'm going to
Okay.
start doing their behind the scenes too. But yeah, thank you so much on going, you need to know your credit, so everybody, I do it because I'm trying to fix my credit, but even if you're not, if you're going to start going get mortgages, know your credit, and start working on it with the information available to like start raising it so you know exactly what you're going to be walking into. And maybe you can even show them your
Mm-hmm.
credit
Yeah.
report.
Right. The second thing after knowing that, I would
Right.
go. You need to set up your own personal financial scorecard, and you can go to richdad.com, and I
Okay.
know you know this. You can print off your own financial scorecard and the numbers, and you get a snapshot of where you are. You know what your net worth is. You know what I'm talking about. Y'all know you've seen it.
I haven't done it. I haven't seen it, but yeah, no, I agree with you.
Yeah,
I,
that's
I,
why I
I
got.
know my snapshot because I'm like a
Yeah.
very money conscious person, but if you don't, but you want to get in real estate investing, I think that's an excellent idea. Go get that snapshot and let it walk you through it so you know where you really stand and what you need to buffer up if you're going to get
Right.
started.
Right. So credit score, know your financial snapshot, know where you are financially. You know, a cold, hard, honest truth. You got to be honest
Yes.
with yourself.
Okay.
Because trust me, the banks
Say
they're
it.
going to run your credit.
Preach.
We're,
Say it.
we're gonna ask for banking statements.
Right.
We're gonna ask for
Right.
letters. We're gonna ask for that stuff. So get it done now because it's not the time to tell me, oh, that's none of your business. Well, unfortunately, it is my business if
Right.
you want this financing. So, um,
It's funny. Sometimes I've used a personal loan to like fix up a house and purchase one. And the amount of information they want to know is so negligible. They just wanted to see 2 pay stubs.
mhm.
But you want to get that mortgage? They want to see your tax,
Yes.
bank statements for 3 months to make sure the money's been there, that you didn't just
Right.
like do a cash withdrawal off a credit card. Like
Mhm.
it's amazing the
Right.
amount of information they want about you that you need to provide for that particular product.
Right. Right. Oh, I'm sorry. Go ahead.
It's okay.
What's okay? So credit, add a snapshot. Um,
Be real
know,
about your financial
be real about
situation.
different situation.
Be honest. They're going to call you out on it.
Yeah, be honest. And then just at that point, go shopping for a lender. You don't necessarily have to go with the lender you're working with. Like, let's say
Right.
you already have a home and you want to get investment property. Oh, go to. You don't necessarily have to go to the lender you're already using.
Okay.
Shop around. There's a lot of smaller banks out there that have great programs,
I
and are
like
more
mortgage brokers personally
right. Right. You can
because they
do
have
it.
access to so many.
Right. Right. Find a company that can work with you. And or if you're comfortable using the bank that you work with, go with them.
Right.
Especially if you have a relationship with them.
Mhm.
So that's what I would do.
And I'm really into credit unions as you can tell too, so don't knock them either as far as a
Right,
source.
right. Right. And then there's so many small credit unions, little banks that you'll see a bank over like, oh, what's that bank? And
Right,
drive
go
in there and see what
inside.
they got,
I'm a
stuff
big
like that.
proponent of calling around and asking. I
Yeah.
ask what credit report they pull from. I ask
Hmm.
what their products are. I ask, I have this credit, what can I get?
Hmm.
Ask it up front before they pull your credit report. But I
Yeah.
mean, they
Yeah.
don't make
Shop.
it easy, but they'll tell you if you call them up.
Right. Right. Exactly.
So
Yeah.
small community banks, large community banks, because everyone's different. I'd say, some banks have been burned badly. Some banks haven't been burnt at all. Some are conservative,
Exactly.
some are loose. You don't know by, the name of the bank which one
Hmm.
of it falls under. Like I like loose banks that give a lot of
Hmm.
credit easily.
Right.
I have to go in and ask, but once I find it, I love it. I have
Right.
my go-to bank.
Right. Right.
And is there anything else that an experienced or a new investor might be able to do that might quicken the pace, or did we already cover it with the knowing your credit, having that information on bank statements, and knowing the
No.
products? Is that you already sort of covered it? That's what can help them.
A few more things, and then the thing we got to transition to the actual property itself. You know, get the title. You know, go down to the county or have your attorney pull the title to the
Okay.
property. The title is, well, experienced investors know this, but for new people,
Yeah.
and I encounter this as a processor, they're like, well, what's a title? A title is basically the credit report of the property. It's going to show if there's any liens, any judgments, any foreclosures, anything for that property, it'll show. Even contractor mechanic sales. Let's say you have, or let's say you're buying an investment property,
Yeah.
owner occupied,
Mhm.
and let's say the previous owner had some construction work done, but they haven't paid off the contract in full yet. Well, what contractors doing now, or they have done the past few years, they
Right.
put contractor liens on the title, and
Right.
that will stop the process in its tracks. So get the title, make sure it's clean.
So you're
If you,
saying I can just walk right to the county and they have those lists of all the liens? I've never
yeah,
done it before, but
yeah,
the
you can go to, it's public record,
the county
and
has that
right, the
information.
county
So I don't
has
have
that.
to pay a title search company. I just got to
If you,
squeeze in
if you,
time to go to the
yeah, yeah, if
recorder's
you want,
office.
yeah, if you want to, that's fine. Some people use title companies. I
Uh-huh.
mean, it depends on your preference, but it's all
Right.
public record. Titles are public record.
Well, it's less
Um,
money if you go to the county yourself, though, right?
right, yeah, yeah,
So
yeah.
you save a
It's
couple
going
hundred
down.
bucks.
Yeah, exactly, exactly.
Okay.
And then the title. Um, I would invest in getting an appraisal, even though you won't be able to use it for the process. This is why I would invest in it. I would invest in it to get to know what the value is, because you gotta understand the mortgage company is going to use their own valuation. But
Uh-huh.
if you have a good sense of what it is worth,
Right.
when you put the value on the application, you could maybe lowball it. Let's say, okay, let's say I get an appraisal now, I pay $500 to get an appraisal done. Okay, they say the property I'm looking at, or property I already have a refinance, whatever. Let's say an experienced investor has a property and want to refinance.
Yeah.
And let's say, okay, pay $500 for appraisal. They say the property is worth 200,000. So I go into the bank, I say, okay, I think the property's worth 125 or 130. You want to lowball it, just in case the appraisal comes back a little bit lower than you expected. Also, if it comes back higher than even your appraisal that you got, now you have more money to work with. Versus if you don't get an appraisal and the mortgage loan officer asks you, okay, what do you think the property is worth? And then the appraisal comes back and it's totally not near what you thought it was
You
worth.
say 250, but it's like
One,
175.
I had an example of an applicant. Oh my goodness. He put down the property's worth 275. Appraisal came back 155,000.
And so what happens when you overestimate?
When you overestimate, that could either stop the process because of loan to value, or that can limit the amount of money that you want out of the, let's say it's a cash out refinance, that can limit the amount of money that you can take out of property. Because some people use the refinance to, pay off the first lien and lower the rate, lower
Right.
the
So
time.
especially for them, they really need to know the true value. I
Mm-hmm.
mean,
Exactly.
because it's going to come out.
Right. And sometimes mortgage loan officers, what they do, and what I used to do, is just go on Zillow. And you can't do that because that's arbitrary. That's not even a real estimate. So I would tell people, either you can play your pocket or have your investors, your partners. Hey, I'm gonna have this property I'm looking to buy.
Okay.
Just put up the money for the appraisal, and I'll pay you back through the cash flow or refund, whatever you want to do. You can pay your investors back. So I would use it as a way to get other people's money involved, get them to
Mhm.
work. Hey, just put up the money for the appraisal. If we're
I
going to buy
get
this
it.
investment property. So it's a way you can flip it. But those are the steps I would take up front before you put an application in.
Okay. And just one quick thing you said about the house and underestimating. What about if the house needs a lot of repair? Does that stop the process, or is that only on like an FHA loan, right? Like, what about that?
I
Because we want to fix up
uh,
broken down properties. That's why we get it for so cheap, because we need to fix it
right,
up.
right.
How does
I'm
that
so
play into
glad.
things?
Yeah, I'm so glad you asked that because I just had a client. When that happens, the appraisal comes back. There's two forms of appraisals when they get done. One is an as is, meaning that this is a condition of the property as is now.
Uh-huh.
Another is on the form it says subject to, meaning this is the property's value subject to these repairs being made.
Okay.
If the appraisal comes back as a subject to, most banks will not move forward with the loan until you get the repairs done. Now, I know what you're about to say.
You
Well,
don't you
that's
don't
why I'm
own the
getting the
house.
loan. Yeah, oh,
Yeah.
you don't own. Yeah, you don't own the house, or that's why. So if you don't own the house, let's say you're looking to buy,
Right.
then that's something that I think you could go back to the seller, say, hey, you need to lower the price, or you need to make these repairs. I'm sorry, let me back up.
Sure.
Purchasing and refinance are two different animals.
Yes.
So let's say on the purchase side, if that
Okay.
happens, you go back to the seller and say, "Hey, you need to make these repairs, or drop the price because I'm going to have to make the repairs myself." That's one thing to do.
Okay,
On the
right.
on the refinance side, that will stop the refinance tracks because the lender won't move forward without the repairs being completed. Most people say, "Well, this is why I'm doing the refinance to get the money out so I can make the repairs."
But they don't want to hear that.
They don't want to hear that,
Okay,
so
it's not gonna work.
not going to
Okay.
work. So, unfortunately, if there's some, that's why it's important to get that property inspection or appraisal. If there are any repairs that you need to be done, you can know about a plan before you go on there.
Right, and stop
If
the
they're raw,
process and have to apply again.
right, right. Is it raw? But that's the difference between, like you said, the 408 and now. Because back in the day, like some appraisals, when I look at them, the appraiser, let's say back in 2003, they just took a
Right.
picture of in the back of the house.
That's it.
That's
Hello.
Now the appraisers, they got to take pictures of the roof, the basement, the attic, every
Nice.
room,
Right.
all of that stuff.
You
They
saw
are
how loose
detailed.
they were, right? Like it was
Yeah,
like the wild, wild west.
right, just front, back. Oh, it looks like 272. Let's go with it. Now it's like detailed. It's getting very, very detailed.
Thank you. I got so much out of this talk. Do you want to go into working with the loan processor? You were talking about that earlier, before I got into like the mortgage beginning steps, but is there anything you wanted to say about that?
Well, I wanted to real quickly just provide a glossary or definition of the people that you will be working
Okay.
with. I feel like most people, they um, they don't know who they're talking to. Okay, so the
Mhm.
first time, this is the definition. When you go into a bank, or let's say you call up an 800 number, the first person you're going to talk to is the mortgage loan officer. This person basically is the salesperson. Let's just be honest, they're the salesperson. Their
Right.
job is to sell you a loan. So they're going to take your application, they're going to ask you some questions, they're going to ask for some preliminary information, banking statements, pay stubs, yada yada.
Okay.
They're also going to pull your credit report. It's just a soft pull. Um, just see, they're really just looking at your score. So you talk to them, they'll submit your application. From that point, your file will get transferred to a loan processor. And that person is basically responsible for looking at the information, making sure everything is in the file that they need to move it toward to the underwriters. So the processor, when they get your application, they'll look at it and they will then call you. Now, if your mortgage loan officer is any good, they'll let you know, hey, a processor will be giving you a call to go over the next steps with you. Okay?
Mhm.
If the mortgage loan officer is good, they will tell you that. If they don't tell you that, they're not good, and I would be a little bit worried. Because what I find is when I call, the bars are like, who are you? I thought I was working with such and such.
Ah.
I'm like, oh, he didn't tell you I was going to call? No. So now you're kind of unnerved because now you're like, oh, I don't never talk to this
Who are
person.
you?
Who are
Right.
you? Right.
Talking about my personal
Talking about
finances.
personal information. Yeah, they
Yeah,
don't
I
know you.
didn't meet you. Right,
Right.
right.
Exactly. So the process then will definitely give you a call. In the industry, it's called a welcome call or intro call, whatever you want to call it. Let's say they basically just go over all information that the mortgage loan officer submitted. They just confirm everything and ask you some additional questions, and they'll go over, okay, this is the next step, this is what's going to happen, or if there's additional documentation that they need, like, hey, the pay stubs you sent in, we can't read them. You got to send it in again, or hey, you sent in, let's say you put an application in December, so we need 30 days of bank statements. Well, you gave us one from August. No, we need one more updated. Okay, stuff like that.
Are you banging the
Uh,
desk over there? Are
oh,
you?
I'm sorry. You hear that? I'm
Yeah.
sorry. So, because I do that at work, that's why.
You get excited.
Yeah, I get excited. So they need to know that information. I'll give you a call, go to the next steps. I ask you some
Yeah.
information. Hey, is your home in a trust? Are you going to be on the title to the property? Is there anyone else who's going to be on the application with you? Are you going to have escrow? Um, what's the purpose of the loan? What do you want to do? Are you looking to get cash out? You know, um, we just go over all of that. The phone call will take about 15, 20 minutes, maybe even longer. So, but that's another video. So that's the mortgage loan officer. That's a processor. So you'll be working with them for the duration of the time.
Okay.
The next person that you will be working with, but not directly, will be the underwriter. That is a person that basically underwrites the file. Basically, in my definition, underwriter, they take your application, overlay with the bank guidelines, the federal guidelines, and make sure that everything matches up.
Okay.
If it doesn't, they'll tell the processor who will tell you, you get the information, and basically the process is the middleman between the underwriting department and you. You will never talk to the underwriter, so don't even ask.
I gotta say something about that because sometimes I go into the bank and I know my credit and I know I have some flaws, and I'm like, if I have a foreclosure or I have this or I have a score of this, am I qualified for these? And I'm like, am I able to talk to the underwriter? They're like, no, no, I can't. And I'm like, and so I have to wait while they call or send a message and then get the feedback back because the mortgage officer never knows the answer to my
Oh,
question. But I'm like,
no.
I am not letting you pull my credit until I have this
Right.
answer because if I don't qualify, bye. I can leave, you
Right.
can leave, I can go to the next place and
Right.
find out that it does. And so I was like, why can I never talk to an underwriter who knows this stuff? It'd be nice if they just put it on a website. So I can be like, I don't qualify. Bye. I don't need to
Right.
come. But they don't. So I was always
Now,
frustrated that I had to wait in that lag time to find this information out. I thought the mortgage officer should know.
and they should know. And what the mortgage officer could do is call. You know, the
That's
processor
happened.
has the processor has a manager like anybody else. Call one of the a manager in the process and say, hey, what's up with this? Or call underwriting manager
Okay.
and say, hey, what is boom, boom, boom? They should be able to get you the answer. So if you go to a mortgage office and say, oh, I don't know it, that's BS. That's
Right.
BS.
Right.
When I was a mortgage loan officer, I made it my job to go get the information. You know why?
Right.
I want your business. So I'm gonna go get it. So the underwriter. And then the last person you'll deal with, oh, I'm sorry, the other person you'll deal with um, is the closer. That person, once their file is final approved and it's ready to go, they'll forward it to a closer. The
Mhm.
closer is responsible for getting the final numbers, the final HUD compiled, the final numbers from the title company. And then at that point, the last person you'll deal with is the notary. The notary will come to your house or they'll meet you anywhere you want, and basically they'll
Okay.
have the documents for you to sign. They don't work for the bank, they work for the title company because the title company will hold all the funds in escrow, and when the loan funds, they basically cut checks to everybody. Those are the people that you'll be working with. But
Thank
the main
you.
person, the main person is the processor. So, and we can go over that in another video. When they call, make sure you have at least 15 to half hour set aside that you can talk to them, ask questions, write everything down, and get engaged. Don't blow off the call or don't call not call your processor back because that's the person that's going to get it done for you. If you
So,
don't talk to them, and it's just gonna. Oh, and the other person, I'm sorry, and it's the appraiser. You're gonna deal with the appraiser when you come to your house, but
do
that's
you
what.
think bank or credit union, it's still the same process, right?
Same
Doesn't
process. Same
okay.
process. No,
Different
anything.
loan products, different lending standards, but same
Same
same thing.
process. Same
Okay.
thing.
All right. Well, I have to say, Quasi, that was amazing. Like, I've been through this a few times, but you helped me out in a lot of different ways on what you're able to talk about today. So, thank you so
Right.
much.
And yeah, that's why I want to. Right. That's why I want to put out this book. And just small book, just a manual, guide, so people can look at it. Like, okay, this is what I need to do, and this is what I'm being talked to. So you just be more prepared in the process, so it doesn't become just a soul wrenching, frustrating, pull your hair out experience. It doesn't have to be that way.
Well, it doesn't if people like you put the information out. And like, you
Right.
have to love the internet and video and YouTube that people can finally share and get that real hands-on information because it's, the banks don't put it on their website and, why should we rely on them? We have to rely on each other coming
Right.
forward with our expertise in these fields. So,
Exactly.
when do you think you'll be done with the book?
I'm looking to be done with it probably at the end of February.
Good,
That's
good.
what I'm looking to be
I'll
February.
be
So
more than happy to check it out, leave a review, and let people know what I think and let people know about it on the site.
right, definitely, definitely,
All
definitely.
right. Thank you very much. I appreciate you taking the time to come and talk to me
Thank
today.
you, thank you. Hopefully this will be first of many.
I do too. I have a lot more questions I want to ask. And to everybody in the audience who sees this, please feel free to leave questions for Quasi and or myself to answer. And if you do have other questions that he might have sparked that you might have about this, go ahead and send me an email, put audience questions slash interview, so I know exactly where you're coming from, and so that I can share that with him. And if he has insights, he can give them to me so that we can give it back to the blog. So don't hesitate to follow up if you want to know more about this process in a real way. I think this was it. This is amazing. This is even good for me who use all sorts of loan products. Please come back and we will be doing more so that you feel more comfortable going through this process, even if you're new or an experienced investor. So thank you so much, Quasi, for coming on.
Thank you,
And
thank you.
this is Lisa from AffordableRealEstateInvestments.com. It's where I give you an honest and practical guide to real estate investing at a price you can afford. Thank you so much.
Everybody get up.